You might be following the global economic news, and, well, there's a curious situation unfolding. Even with a bit of a break in trade disputes, we're seeing some unexpected shifts.
That's right.
So today, we're diving into a recent Indian Express report. It's analyzing the weakening U.S. dollar and what that means, especially for the Indian rupee.
Exactly. We're looking at financial market trends, key economic indicators, basically trying to figure out why the dollar is losing ground.
And where investors are looking instead.
Yes, and crucially, what this all means for India's currency. It's quite a complex picture.
Okay, let's try and unpack this. The Indian Express piece highlights a pretty notable decline in the U.S. dollar. Now, normally when markets get jittery, you'd expect investors to flock to the dollar for safety, right?
Usually, yes, but this time seems different.
Yeah, the report says the opposite seems to be happening.
Well, what's fascinating, and the article points this out, is that instead of the dollar, we're seeing money move into more traditional safe havens.
Like
Things like the Swiss franc, the Japanese yen, even the euro, and gold. Gold has actually reached record highs.
wow, record highs. So this suggests maybe a shift in how investors are viewing risk and where they see security.
It certainly looks that way, a potential change in perception, perhaps.
And it's not just about currencies, is it? The report mentions Wall Street stocks took a downturn after just a brief rally.
Correct. And something else quite significant, U.S. Treasury yields. We're talking the returns on long-term U.S. government debt.
What about them?
They saw their biggest weekly jump since 2001. That's a huge move.
Okay, a lot good on the U.S. markets then. So what's the knock-on effect for the Indian rupee?
Well, according to the Indian Express, the rupee actually opened weak on April 11th, which was a bit surprising given some positive global cues.
Weak, despite the dollar falling.
Initially, yes. However, the thinking is that the continued slide in the U.S. dollar index plus falling oil prices should provide some support. A bit of a cushion for the rupee, you know?
Right, falling oil is usually good news for the rupee.
Mm-hmm.
But you said it started weak. So what's the expert view from the report? How much strength can the rupee realistically gain here?
The analysis suggests that while the rupee might see some gains because the dollar is weaker, a major appreciation, getting much stronger than, say, the 86 level against the dollar. That's seen as pretty unlikely.
So some support, but limited, suggests other factors might be holding it back.
Exactly. It's not a straightforward boost. Now, the report also brings up something interesting about President Trump's decision to pause tariffs.
Oh, yeah? What's that?
It suggests that a sharp sell-off in U.S. government bonds might have actually prompted that pause.
Really? Why would a bond sell-off influence trade policy like that?
Well, think about the signal it sends. A big sell-off in government bonds can indicate, a real lack of confidence in the U.S. economy.
I see.
And the Indian Express piece mentions reports that some major foreign holders of U.S. debt, Japan, China, they might have been selling off some of their U.S. bonds because of all the trade war worries.
Right. Okay, maybe for listeners not totally steeped in finance, can we quickly explain what government bonds actually are?
Sure, good idea. Basically, think of them as IOUs. The government issues debt to raise money for public spending, and it promises to pay back the borrowed amount with interest over a certain time.
And the U.S. has a lot of this debt out there.
A massive amount. The report mentions over $35 trillion worth. And a big chunk of that is held by foreign investors and governments.
Okay, got it. So how do the yields, the interest rate or return on these bonds, connect back to currency values, like the rupee?
Okay, so typically, higher bond yields in a country like the U.S. can attract foreign money. Investors want those better returns.
Right, they buy dollars to buy the bonds.
Exactly. That demand pushes the dollar up. It's a strategy some call the carry trade. But, and this is the really crucial point the report seems to be making,
What's that?
the perception of U.S. bonds might be changing. That recent spike in yields we mentioned. Instead of signaling a safe place with good returns, it might now be signaling increased risk in the U.S. economy.
So higher yields aren't necessarily attracting money this time, they're actually scaring it away. That's a twist.
It suggests that, yes, it indicates rising risks. And there are broader implications, too.
Such as?
Well, rising yields make borrowing more expensive for the U.S. government itself. That could potentially affect funding for big programs, like Social Security or Medicaid down the line.
Okay, that's a serious potential consequence.
And perhaps even more telling, the Indian Express highlights this. For the first time in 2 years, investors are demanding a higher premium, basically, more compensation for risk to hold U.S. debt compared to European debt.
Wow. So they see U.S. debt as riskier than European debt right now.
That's what the pricing suggests, yeah. It points towards growing fears of a significant U.S. economic slowdown.
Okay, so let's try and sum this up. Despite a pause in trade actions, we're seeing signs of declining confidence in the U.S. economy. This is showing up as a weaker dollar, investors moving to other safe havens, and nervousness in the U.S. bond market reflected in those rising yields.
That seems to be the picture painted by the analysis.
And for the Indian rupee, this whole situation offers some, maybe limited near-term support because of the weaker dollar and lower oil prices. But a big surge in the rupee's value seems unlikely.
That's the key takeaway, yes. Limited upside potential for the rupee from this specific dynamic.
This whole situation really makes you think, doesn't it? It raises a question for everyone listening.
Oh, one.
With these traditional safe havens like the dollar being reevaluated, what new factors do you think will be most influential in shaping global currency stability in the coming years? Something to ponder.
That's a great question. The landscape is definitely shifting.
Absolutely. And especially for our listeners who are UPSC aspirants, maybe following this as part of their daily UPSC mains current affairs prep.
Or even for prelims, these economic shifts are crucial.
Exactly. We hope this deep dive into the Indian Express analysis has been valuable, helping to understand this important evolving topic.
Our goal is really just to provide that context, help you navigate these complex global economic shifts.
Definitely. So if you found this discussion insightful, please do like and subscribe for more of these deep dives.
And please feel free to leave a comment if you have any further questions or points you'd like to discuss. We do read them.
We certainly do. Thanks for tuning in.